All right, so go ahead and do this. All right, so this was our last week, basically this component here. So obviously we had a lot of it was basically a lot of chop, but we dropped by 10% and then we went back up another, what was that, 40% in the course of like just a few days. 40%. 8%. Wow, my math is off today. Pay no attention to me. Um, but basically, it was just a lot of chop. We did nothing but range, and that's all we've basically been doing. Like we do like a big move and we range. We do a big move and we range. That is just it just seems to be how the markets are nowadays. It seems the market maker is taking a lot longer to make his moves, and right now we're doing the same thing. We're ranging, and we're kind of in you love your trend lines. We're kind of in uh a compression right now. Which way it breaks out, I got no idea. We'll have to kind of take a look at the numbers and everything. Because I actually have a lot of good reasons for it, for a bullish stance as well as a bearish stance. As I mentioned last week, I was really trying to move away from letting market sentiment affect my judgment and macroeconomics for that matter too. And while there's still important factors to consider, at the end of the day, following the price action is what actually makes me money. And so when I look at this, usually when I start off the week, I always work from the top down. And this is where my first bullish thing comes into account. I have not looked at the weekly in a couple weeks, which is kind of on me. Some weeks I only start in the daily, but I should have started on the weekly because I noticed this morning. We actually, when we had that huge rise mid March, that 30 or 40% week or whatever it was. Here, I better just double check this because we know my math is off. All right, so it was just under 30%, but we actually broke the 50 EMA on the weekly chart with volume, which is traditionally a very, very, very bullish signal. I Unfortunately on the perp charts, I don't know if I can show another example of it. I probably have to go back to spot. Yeah, but like it has not done that on the perp charts since 2019. Like here it did rise. Like obviously we've had bull market since and stuff, but when you're looking at the market maker method, that is a very bullish sign. The only caveat I have to that is the level doesn't make sense. So if you're looking at this was when we moved into the bear market, right? So we had our bull run, we hit a peak, we dipped back down in the summer of 2021. We came back up, we retested the 69K region, and then we started our bear market. And since then, we have not actually had a proper downward move of the bear market. We've just kind of, as much as we've lost so much as far as equity goes, it's been very small moves. Like that's a bear market, or sorry, that's a bull market. This move up here, that's a proper retrace. That's a proper retrace. This is just noise in the grand scheme of things. Like, um, so the problem is that because we haven't had any proper levels down, this move may be a whole lot of nothing. It's bullish in terms of it could go up more, but if we stay true to the method, what we very well could wind up seeing would be something like we've got this big wick. We've now got an indecisive doji here, and we're just starting out the week, so we don't know what's going to happen. But if we see something like, if we see this week a bearish engulfing, that would be an actual very bearish sign for the grand scheme of crypto for the rest of the year. It would basically negate this push up. So right now it's not really telling me anything specific, unfortunately. It's just telling me I need to watch this because over the next couple weeks, if we manage to stay above this 50 EMA on the weekly chart, that actually spells a lot of good news for crypto, or at least for Bitcoin in general. I don't know about alts. I got theories about those too. So this is just something I just recommend watching. But that doesn't help in the short term. Uh, where I'd be looking at if we were looking for potential rejection points. Usually we go for the 50% level on the fibs of the vector. So we'd be looking hopefully for a retest at around 25.1, which actually just is about to line up with the 50 EMA. So if we see price come back down over this week to about 25K and hold there, and then eventually start going back up, that could be a very good sign. And that, for those of you who tend to do a lot of retail trading, that's just a standard Kobo type of maneuver. So we could see another big push up after that. Now, as far as the lower time frames go, daily we are still on rise level 2, which I've been talking about for quite some time. So we had our W way back here in after FTX. That is a horrible W. Pay no attention to my drawing skills. But we had rise level 1 here. This is too small of a move for me to consider a rise. Um, that's just kind of its own little thing. This is definitely rise level 2. And now we're in a boardroom right now, just a consolidation period, waiting for the next move to happen. And my thoughts on that still is an expectation that we're going to come back down and retest the 50 EMA at some point. Now, if we really want to see some bearish or some bullish momentum, we could find ourselves retracing back down to recover this candle here, which would be right at the 25K mark, which if it happens over the next week or two, that 50 EMA is going to hit that. So that could actually be another sign of confluence. Now, the iffy factor here, right, is because I'm still not 100% convinced on the weekly that that is a proper rise level 1 that we're seeing. It doesn't make a lot of sense because the rest of the chart just does not fit the model. It's just we just had a big green candle is all it really looks like at that point. But we could also be looking at on the flip side a significant bull trap. So I'm sure you guys have heard a lot of influencers talk about the 30K mark, about how that will be a solid signal for us moving into a bull market. And if they're not talking about 30K, they're talking slightly above it, like 32, 34, 35K, something like that. So what I'm reading here is if we look on the weekly, right, I spoke about, we hit the 50% rejection line and a Kobo off here, which is absolute bullish signal for retail traders everywhere. Then you look on the daily, the market maker method plays out to do the same thing. Now, this would be the last rise. Whatever it looks like, it'll be the last rise before a potential reversal on the daily if the model holds true. So my expectation is that we'll actually have our third daily rise. And if we retest to 25K on the weekly, it looks like bullish momentum for retail. And then we're going to finish the third rise of the daily. And then we could potentially have a reversal. And basically all the bulls who start dumping in all their money because now we've hit 30, 32, 34K, something like that, they're all going to wind up getting wiped out in the process. That's kind of what I'm suspecting may happen right now. Now, I've looked at these levels before. I spoke about this last week. My expectation for the third level rise, my first target is this recovery zone here, this vector, which is right around the 31.8 to 34K mark, which I have seen many people talk about is where they're expecting to see where they're basically willing to just say the bear market is over and go full bull. And I could very much see the possibility. I know this is all crystal balling right now, but the play I'm looking at is we have our rise up, we hit the 32 to 34K range, we come back, we retest, we come back up again, which again is another very bullish signal for the for retail. But then we could have a reversal because at that point we've now created our M structure on the daily. We've had our 3-level rises, which according to the market maker method would be that's when we'd be looking for a drop. It doesn't have to be that way. They could wind up doing an extension. Like this could still be bullish. So I'm not ruling it out. I'm just saying that I can see a very obvious bull trap in the making. And that doesn't mean we can't make money either. Like a move from 27 to 34K or possibly higher. Like if we go above that, our next step would be up here. So now we're talking 36.5 to 40K. So I mean, you can make a lot of good money riding this up. There's no reason why we can't be short-term bullish. And then once price actually gets up here, then we see how the price action acts and we adjust accordingly. But I would be very wary of that. So once we hit the 32, 34K range, just pay attention to the charts and follow what the charts are saying as opposed to, just general market sentiment. Because my guess is if we get up there, market sentiment's going to be going through the roof as far as bullish thoughts are. Looking at the lower time frames, so if we're looking at stuff that may happen this week, the 4-hour is looking ready for a third rise as well. So it looks like we had a V reversal down here, or let me just remove all this crap. Or we could have an insanely ugly W down here. Something like that. I hesitate to even call that a W, but sometimes, especially with the way the markets have been recently, sometimes they just don't line up the perfect way you want them to. So I didn't like I got a little bit of this move, but I didn't put a lot in because again, it was stupidly ugly. So I missed a lot of this. I was yelling about that last week too. And that's why I wanted to change my thought process and look at price rather than just market sentiment because I've had a very super bearish mentality and it's affected my trade. So I've only been basically looking for shorts and occasionally playing into longs. And I've lost a lot of opportunity because of that. I haven't been losing money. I've just been losing opportunity. Just CK session ending. Okay, so yeah, we had the W on the 4-hour. We've had at least one rise. This is where it gets a little tricky because this does not look like an end of rise level 1. It actually looks like it continues. So there is actually a very good chance this is all one rise. I know it's now 2 circles. Deal with it. But that would all be one rise. Then we had a big retest following the FOMC. And now we're just in a consolidation period, which means we could see 2 more moves up on the 4-hour. And where those would wind up, if we do have moves up, if we're looking for vectors again, is ideally next stop would be here-ish. So it'd be looking, 28, 29K again. Then you've got 29 to 30K. And then after that, the next imbalance is over here, which is 32 to 33K. So we could very much see a move up to those levels again when the 4-hour decides to play itself out. With the mass amount of accumulation we've been having, I'm not 100% certain where we're going to go at this point. The only thing I can tell you is the market maker is definitely doing something squirrely. He's accumulating. And when he's accumulating, that's when the big moves happen. So, like, for example, we accumulated from March 3rd, basically nonstop. Like, I'm sure you all remember how flat the markets were at the beginning of March. Hell, even in February, the markets were more or less dead. And then, we had our dip down, and this was like a 1-day move. This was like all of 1 day. And then we had our massive explosion mid-March. So we could expect to see something like that again. It doesn't necessarily have to be this similar style move, but we could. And I mean, it would actually work itself out. We could see, with all the consolidation we've been having, we could see the market maker move us back down to the 25K line, which would be well within the structure of a 4-hour retest. Basically, the 4 hours still counts unless we get below about 20.8. Like, we'd have to kind of reach the bottom of this initial rise. So really, all this area is fair game if they wanted to move price down there and still maintain their structure. But if I was a betting man, which I am, I would assume that they would kind of retest down towards 200 EMA here, which would again be that 25K level that I was speaking about before. And at the 25K level, that would induce a lot of shorts. It would wipe out a lot of people who were longing at the end, the people they've had trapped. Anyone who started longing from about 25 to 27K, they're all trapped right now. So this would be a good way to wipe a lot of them out. And then they could then turn around and then do their next rise of the 4-hour, which would then potentially be the third level rise of the daily, which could push them. So you could have the 4-hour move up, right? It'll hit maybe this area, maybe hits this area, and then it will at some point likely do a little bit of a retest on the 50 again. So it might come down a little bit, and then it does its rise level 3, which brings us into the 32K range, which then completes rise level 3 of the daily. And everyone's now screaming for, full bull market. And that's when they can potentially look at doing a reversal. That's kind of what I'm seeing on the 4-hour. Now, if we're looking at it from a negative standpoint, like what could we look at seeing price go down? Again, my biggest thoughts are this area. So if we were going to see a big retest of the 4-hour right now, and we go past this 25K level, my next stop would be this 800 EMA, which is this purple line here, because that would line up with the daily's 200 EMA, which would again allow it to still maintain its rise structure, but still do a proper retest. And it would just be a stronger move. Both those levels are completely accessible by the market maker. And with how much consolidation they're doing, a big move down like that, and then a strong move back up is absolutely within their field of possibilities. On the 1-hour, when we start getting into the lower timeframes like this, it's getting much, much harder to kind of gauge the price action, just simply because of the fact there's been so much choppiness.
Yeah.
That market structure just is not quite there as of yet. When we look at this, like obviously we had a W here. And then we had rise 1, This is actually a solid rise one because we actually had a stopping volume candle. So we had a lovely high test with volume to stop out that. So that's a textbook rise one completion that we consolidated for a significant period of time. None of this I would consider a rise two. I mean, technically, you could consider something like that a rise two, but it's so all over the place. I would not feel comfortable saying that. It literally just looks like retail will just kind of push stuff up. And there's just been slight momentum pushes by the market maker to get price up back to this level with very little effort on their part. So honestly, on the 1 hour, I don't even know where we stand in terms of current market structure. I would want to wait. And when it gets unclear like this, that's when it's a no trade area for me. So with something like this, I would not be wanting to put in any kind of a trade, at least on the on Bitcoin, until I see the market maker make an appropriate move. And those two potential moves are available on the higher time frames, which would be what I was mentioning before, either a breakdown and a retest at least to 25K, or possibly down to the 22K here. So if we break down to one of these two areas, I would definitely look at buying back in here if it looks like price is consolidating. Or if it's just going to keep going, I would likely have staggered DCAs. So I'd have to look at to see what resistance and order books are like as we get closer to this level. Also, how long it takes to start moving down. But I would start actually putting in buys with the expectation that we're going to make it down to about the 22,000 mark before we do our next lift up. And but until it hits one of those levels going down, I'm not buying anything more. And if we're going to go up, our next potential area I mentioned before was around 29 to 30K. So that doesn't mean that that'll be a rise, but if we kind of just drift up here, right, over the next few days, and we start hitting resistance again, then this might be the point where then they do their drop afterwards to do the proper retest. So I'd be potentially looking for a short here. It's hard to short right now just because the higher time frames are definitely pushing for the fact that we're going to be moving up at some point. And the general rule of thumb is not to counter trend trade the higher time frames. So with the fact that I know that even though I know they're supposed or not know, but like I'm expecting a pullback. Even though I'm expecting a pullback, trying to trade that pullback is not necessarily the smartest idea in the world. The big money is going to be the buy-ins at these levels. But if it gets up here and it's looking obvious, like we're not going to be going up much further, then that might be a time for a short. Like I'd have to see what the lower time frames look like at that point in time, because that will actually be a solid move down. Like if we're looking at something like this, that we're able to buy in around there, we get down to even the 25K level, that's a 5R risk to reward ratio, depending on where the stop gets put. And the stop would be determined basically based on what price is doing at that time. And then if we get down to the 800 EMA, so we're getting down to like the 22.8, 23K level, that's now almost an 8R, which is still, which is great. It's just that at least makes it worthwhile for the risk. But I wouldn't want to try to do it when price is down here because I mean, now you're only talking, what am I doing? So like, if I was expecting us to start going down from here, I'd put my stop over this price here. Then we're talking, it's a 4R if we get the big move down. And then if we're at the 25K level, that's 1.96. That's, to me, that's not worth the risk. especially since the higher time frames are flat out saying that we're going to have another rise. Now, that doesn't mean today or tomorrow. It just means soon-ish. So like it could be before the end of the month, it could be sometime in April. Um, but right now we don't know, right? We don't have a crystal ball. So the best way we can do is I'm going to actually do this as well. I'm actually going to set targets or alarms for each of these points or just before it. And as soon as those alerts start getting hit, then I can start watching the charts. And until that happens, there's no point in, for me at least, to care about Bitcoin. Because anything that happens here means nothing to me. Any questions about any of this thus far?
None for me.
Okay. I'm going to just quickly look over the chat before I migrate to other things. I'll talk about
Craig,
ETH
I have a
shortly.
question.
Sure.
Why are we using the perpetual future chart, not the standard one or the spot one?
The reason why I use perpetuals is because the method I use, which is an offshoot of the Wyckoff method, it's not exactly it, but it's very similar. Like it's based on it. It functions based on market maker manipulation, and the market makers focus on using perpetuals. So typically, while I can use the spot charts, usually I can better pinpoint stuff using the perpetuals. So yeah. So like for example, the FOMC meeting. Unfortunately, I don't think I posted this publicly. I know I posted in the WhatsApp group, but the FOMC meeting, I was able to actually accurately call where our high point was going to be and where our drop was going to go to from the FOMC. Despite all the chop, I had called the top and the bottom of that. I did the same thing in November during that FOMC. And it doesn't always work out. Like I'm not Nostradamus at this type of stuff. But if I did that on spot, I won't get those same numbers. So it just helps me better fine tune stuff. That's really all it is.
Okay, that makes sense. And regarding the market maker methods, where can I find any resources just to read about it?
What I will do is there is my mentor who I use. Her name is Annie. She has a website called Trade Travel Chill. I don't know if her website is up right now, but she is the one who's taught me this method. And there's a few other people out there who try to teach something similar to this. And I think most of the people who are in here who also use it would agree. She is probably one of the best people out there that explains the method in a way you can understand. What I will do is I'll post a link to her in the Discord later today. And then just feel free to check out her stuff. She's fairly inexpensive. I think she did change prices recently. I think the course is about $50 a month to buy into it, but it'll be the best $50 you ever spent.
Yeah, perfect. Thank you for that. Please post it on the chat so you can.
Yeah, I will. I will do that after this call.
One more question, please.
Sure.
Yeah, so far I was on the sideline, but now I'm to get in. In your opinion, do you think it's the right time or should I wait?
Sidelines for what specifically? Like obviously to get into the market.
Bitcoin. Yes, to buy spot Bitcoin.
Well, I mean that's always going to be a personal opinion.
Yeah.
Let's put it this way.
Just I want your opinion.
I am at an opinion right now that it's a good idea to have some skin in the game because you just like we've had some unprecedented moves over the last few months. Like I was here, right, when we were at the 15, 16K range, I was completely out of the market. So I missed this massive spike, that we had at the beginning of the year. And I was like, okay, well, I'm expecting a pullback. Everyone was expecting a pullback. And we had a very slight one, and then we had another massive rally. So, and then, we had a slight pullback again and another massive rally. So the thing is I've missed out on most of these big opportunities because I've been constantly expecting price to retest. Like, and that was based on my super bearish sentiment. Like, I take full responsibility.
Yeah.
So, and Harry will probably attest to this. He has been saying for months that, you know, we can't just be in constant super bear mode. And he's probably one of
Yeah.
the few that I know who's actually been doing a lot more spot trading. He's still being conservative, like he's not aping into stuff, but he's DCAing in, he's being he's trying to play the market as the way we all should be doing. And he's been
Yeah,
seeing some
right.
success from it. So as far as spot goes, there's never really a horrible time to buy, especially if you're planning on long-term holding. Because I mean, even if you buy right
True.
now, right? Like,
Mm.
let's just say you agree with me, and we're expecting price within the next month or two to hit 32 to 34K at a bare minimum, right? Just based on what I'm seeing. I'm not saying it will happen. I'm just saying let's pretend you agreed with me. At
I understand.
27K, you're still talking a minimum 17% return. So even if you're buying now, even if this is not going to be the bottom for Bitcoin before it heads up here, you're still talking 17 to 22% return on a spot trade. And then, so if you buy in now and you just start DCAing in when you see other opportunities, so then if it just starts dipping down or if it gets down to our 25K level and you just start buying more, more and more, allocating more of your pot, and then we eventually hit that 32 to 34K range, that's just more money for you. But at the very least, if you're in a little bit now and we head up there, you're still going to see some profit out of it. Of course, there's always the possibility that I am completely wrong, and we're going to have now another dozen bank collapses, you know, within the next week, and then suddenly Bitcoin plummets down to below 20K. And then if that happens, your worst case scenario is, well, you just have to wait for the markets to recover, and you could be waiting months, years, whatever. But you know, so you kind of have to take your own risk analysis and your own charting analysis to kind of decide what you want to do. But at this point, I don't think it's a good idea to not be at least taking into consideration that we may see a lot more upwards action.
That makes sense. Thanks, great.
No problem. All right, I'm just quickly going through the chat here. Anyone else have questions before I move on? Oh, Tom's agreeing with me. I always like to see that. All right. ETH, I have not looked at these charts as of yet. So we're going to see my analysis, you know, as is. So ETH, we did not get a volume rise on the weekly like we did with Bitcoin, which leads me more to think that, like, well, we don't have confluence between Bitcoin and ETH as far as the bigger moves goes. That's usually a sign to me that one of those moves, or that the move I thought may exist, might be a false move. So with Bitcoin having that big spike, that may not have anything to do with the market maker, at least not as far as their overall market structure. It might just be something else at play that pushed that volume up in addition to everything else. So with the fact ETH has not had that break, that kind of gives me more confluence that we may not be seeing a big move expected on the weekly charts. Like, we still have, you know, we had our peak here, we had our M. Here we actually did have a break, but it came back and came back right over it. So this could be a rise one down, or sorry, a drop one down. It's very hard to say. Like, as I said, the charts with all the chop, it's become a lot harder to gauge where the stuff is going. That could be a drop, but then we haven't seen that drop on Bitcoin. So it is very possible we are still prepping for another peak to this M. So what could wind up happening is we could wind up coming back up here at some point. If we hit 32 to 34K, that probably wouldn't be enough. But like, let's say Bitcoin gets up to 40K, ETH we may see hit 2,500, 3,000. We could see a spike. Like, I have no idea what's going to happen with the Shanghai update. That happens in a few weeks. I mean, you would expect sales pressure, but we also know the markets rarely act the way you're thinking it's going to all go when you have big news events occur. So it is possible there could be some incredibly bullish news that happens for ETH over the next couple of weeks. Say the SEC decides, you know what, we consider ETH just as non-security as Bitcoin is. I don't see them saying that, but we don't know. And news like that could spike ETH up in the same way it has Bitcoin, because a lot of people are feeling that Bitcoin is one of the safest places if you're going to invest in cryptocurrency right now, because it's the only one the SEC is not actively targeting. They flat out come out and said it's the only one we don't give a shit about right now. And ETH is still, as far as I'm concerned, in their crosshairs, and we may see action brought against ETH after the Shanghai update, because there's a lot of thoughts that once people can start actually pulling out their staking, that it's going to the SEC is going to go after it at that it's a security, just like they have with almost everything else. But I don't know. So if we get some seriously bullish ETH news, we could see a spike up into the 2,500, 3,000 range, and that would actually potentially be, like a third peak to the formation before we actually see downward action. It's really hard to say this chart, unfortunately, because I can't see unfortunately with the perpetuals, I've only got back to late 2019 on this. I could look at the spots as well, but at the end of the day, it's just the weekly chart is a mess. But at the very least, usually when we see prices kind of dicking around the 50 EMA, usually we wind up seeing a retest as well. So that is also a possibility. We might see a slight drop, nothing crazy, but maybe a drop down to about 1,500 or so. We'll likely stay above 1,400. I don't see us breaching below this boardroom. There's no reason to. If the market maker wanted to actually recover any imbalances, they would actually have to come all the way down here to retrace the levels we were at in just before the summer of last year. Back to the 800 to 1,000 range, which, granted, if we got to 800 or $1,000 ETH, I would be so ecstatic about it. I did not buy into that when I should have, and I've regretted it since. I did buy into it, but I sold it when we hit that peak right there. Which, I mean, is still a good profit. I mean, like I sold and I think it was around 1860, 1870. So it was a good amount of profit, but just with the way the markets are right now, I kind of wish I'd at least kept some of it, but I didn't. I closed it completely out. So I would love to be able to get back in at that level. But yeah, so ETH on the weekly, not really showing any clear signs of how things will go. The daily, again, it's not incredibly clear. We had our peaks up here. It's all like, years ago at this point. So if we're looking at the recent peaks, like, honestly, this doesn't even look like we've had a rise. Looking at all of this, it just, well, maybe. I guess and this is when it gets guessworky like this, it always is a little bit concerning. But we could have had a W here. We could have had our rise 1. We had our retest, our rise 2. But we didn't. Well, that would be. I mean that. Well, it did hit the 800 EMA, so that actually could be rise 2 right there. Then a retest and rise 3, but like you can probably hear the uncertainty in my voice, which is, and when that happens, I don't like those kinds of levels. But then we wound up having a V reversal. We came down, we had drop 1, came back up, another drop, then another drop down there. And then, we've had potentially another W here and another rise up and a second rise up, which would then have us potentially have a retest. Well, maybe not that far. A retest would likely be either there on the 50 EMA, especially with the fact the 800's there as well. And what is this? What is the 50 pip here? 1632-ish. So this would be all right, so that would be a potential retest level. I know I'm making a mess here. But yeah, it's so I mean, I could see a retest of ETH coming down to that level, which could happen if we see the retest on Bitcoin. If Bitcoin gets down to 25,000 or so, ETH is going to come right along for the ride as well. And then of course it could go all the way down to about 1550, but I don't really I mean, the lowest we're probably going to see it is this point down here at this 1450, at least until the markets reverse. Because there's no reason to really come back down further. But we'll just have to see how it goes. But either way, ETH is not looking very clear to me. So it's really hard to gauge stuff. If I was going to look at buying into ETH, I would be basing it on the retest of the daily. So I'd be looking at, as I said, this level would be a good buy-in spot as far as I'm concerned. And this level would be a good buying spot. So you're talking 1600 to 1650, 1550 to 1600, but it could drop lower than that. So I mean, when I set these up, it'll likely be, just 10% of my spot buying power here, another 10% here, and I'll just have to re-gauge the price action as we hit each of those levels and kind of make an assessment. So yeah, ETH going up. The next likely spot we'll see ETH go, at least on the daily time frame, again, it's going to be up here. So we're talking the low to mid 2000s. So even at this level, again, just like I was saying with Bitcoin, even if I was to buy in right now, you're talking anywhere between a 21 to 40% boost. Now, that all being said, there is I'm going to start moving us on. Unless people have questions about ETH, I'm going to move on to some of the new stuff. Because while that sounds amazing, there are still some things on the horizon that actually concern me about ETH, which is why I'm not buying in as of yet. I will if price gets down lower, because even if we don't have a rise in the short term, I see more possibilities if I'm able to buy in, a little bit further down the line as opposed to levels we are at now. Let's see here. Cohen still stands by $800 ETH. Do I see it? Well, yeah. I mean, like I was mentioning that earlier, right? We could definitely see a move back down to for me, I was saying the $800 to $1,000 range. Going below that is potentially possible as well. Like, I don't know what his reasoning for why $700 is his target. But if we hit 800 to 1,000, depending on the reasons why we get there and what the market structure and the pricing action is like at that time, there's no reason why we can't go down further. Like if you look at, let's move all these again. If we look at target points for ETH, so if we just look at vectors, 775 is the close of a vector. If it goes below that, we're looking at the top and bottom of here. You're talking 600 to 686. If we drop below that, then you're talking, 480 to 580. So I mean, there's a lot of potential if ETH drops that low to get very low. It's just so like I can see it, but I wouldn't necessarily say it's going there as of this moment, but I could see if price gets that low, I could see why that would be a target number, if that makes sense. But the narrative was when we hit 800, I'm pretty sure when we got to those low numbers, it was during the aftermath of Luna and Anchorage. The markets basically died for a month. And I think it hit its 800 level just before the okay, let's see here when it hit. Yeah, so June 18th, it hit 868. So that would have been about a month after the Luna collapse. And then we moved on to, our summer rally, which was amazing. Okay, so any other questions before I move on to other things you guys need to be aware of that's going on in the world? I don't think it was $400, but it was around that time, I believe. Yes, I think he bought in around 200 or so. I think it was just a little under 200. That was back when there was a lot of talk about quant and how it could be used to bridge different CBDCs and payment transfer currencies and stuff like that.
That was back in October.
Was that October?
Yeah, it was. Yeah.
So, all right. So a little bit after the summer, but yeah, it was a pretty high price that was bought in at that point in time. All right. So the things I want to talk about to start is this altcoin price action. I've been talking about this for months, and I would love to get your guys' assessment. Like, you might not know it now, but just kind of watch it for the next week or two and see if you agree with me. So I have been very much under the suspicion we are seeing a lot of altcoin exit liquidity, and we have been since mid to late February. And the reason why I say that, unfortunately, today is a day it's kind of hard to show, just because we're kind of having a slightly down day right now. But what I tend to see is the when Bitcoin and ETH are rising, normally you would expect alts to rise above and beyond what Bitcoin does. So if Bitcoin, say, goes up 1% in the day, you typically would expect alts to do 2%, 4%, 5%, whatever, something along those lines. But typically on rises, we're not seeing that. Usually what winds up happening is Bitcoin goes up. Bitcoin goes up significantly. So like say we'll we'll have like a big push of like 5 or 6% of Bitcoin in a day, but the alts will only do 2 or 3%. But then when we have drops, like today, Bitcoin is down about 0.59%. And with the exception of XRP, and I don't know why Doge is pumping, but like with the exception of a few coins that are outliers, everything is taking a bigger hit than what Bitcoin is, which is normally what you would expect. So the alts work normally in downward movements, but they seem to struggle in upward movements. The only time that seems to change, what I typically often see is Bitcoin will go up, the alts will struggle. Then a while later, whether it's a few hours, it's a couple days, at some point, the alts will just all start spiking up. And Bitcoin isn't really moving at that time, which, to be fair, is typically acceptable. If Bitcoin is basically going sideways, the alts can do what the alts are going to do. But the alts will all tend to rise up around the same time, despite the fact Bitcoin is doing nothing. And then usually within a day or two after that, we have a big dump. So like I saw it happen. Basically, let's go back to Bitcoin. I want to get to the normal charts. Unfortunately, I don't have those notes directly in front of me. I'd have to go back to all my talks about it. But typically I will see very red days shortly after the alts have pumped. And when those alts have pumped the day or two previous, they drop significantly more than they normally should afterwards. So I'm seeing a lot of potential that the alts are basically being inflated just for exit liquidity. And one of the ways I can kind of show this in a bigger scale, and I've spoken about this before, is when we talk about the peaks of Bitcoin, right? Say we look at August when Bitcoin was at 25K, and we look at, say, February 18th when Bitcoin was at 25K, and we look at March 14th when Bitcoin was about 25K, and we look at any alt, most alts will have this exact same pattern. So we're talking August, right? So we're talking all right, well, Adam might not be a good choice, but of course, the first one I pick is a little bit off. But even though Adam kind of went on a little bit longer, right? It had kind of a spike rally, but this was into September. The markets were going down, and Adam was just spiking up. But regardless, it peaked around the same time Bitcoin peaked at about 16 bucks. Then when you get to November again, it's dropped down. When we get to February, where Bitcoin was around 25K again, it's a lower high. And then when we hit mid-March, where Bitcoin was lower, or like hit 25K again, we were again at another lower high. So even though Bitcoin is returning to various levels, the alts are not having that same thing. It's clear if you look at something like DOT. So you've got the 25K mid-August there. You've got November. Then you've got the, what is it, mid-February is here. So this was when Bitcoin hit 25K mid-Feb. And then we had mid-March, which is here. So the alts are bleeding money, even though the Bitcoin market has been going up. And you'll notice that on almost all the alts. If you take that timing on most of them, I'm not going to go through them all, but you'll basically see that as a standard thing. FTM, well, I don't know what the fuck happened with FTM. I think didn't Andre come back beginning of this year? I think that's one of the reasons why it massively spiked. But regardless, just keep an eye out on it. I'm very wary about going into most alts. The only ones that I'm even looking at putting money into right now are going to be ones that are for long-term spot buys. That's the only ones I'm looking at. Beyond that, if I'm looking for short-term trading, I'll do perps, and then of course I'll do spot and ETH buys, or spot Bitcoin and ETH buys when I can. Someone imported to the protocol. Yeah, so that was that Andre. I can't remember his last name off the top of my head, but I know he left FTM mid 2022. He was like, I'm going to do my own thing. I'm taking my ball and doing more important stuff. And FTM like just led for a long time. And then he eventually came back, and I do remember there was a spike around that time, and I'm guessing that was it. So that's just something to watch. So I'd be very wary about alts right now. And I really challenge all of you to kind of watch pricing process over the next week or so and see if you see similar to me. The next time you see Bitcoin go up by a couple percent in a day, see how the alts are performing. There will always be some outliers, there always are, but just in general, what you see the alts doing, whether the market's going up, down, or sideways. And I'd love if you guys see different patterns or if you kind of see what I'm seeing. I've been watching the same, alts are rising less and falling more than Bitcoin. Exactly. So I would just be wary of that because that to me just sounds like big money is using us to cash out their alts, which means that once they're done, they'll stop propping up the alts and we're going to see the alts fall and fall hard. That doesn't mean that, they're all going to zero. It just means that there's just ongoing reasons to suspect alts are not going to suddenly have this massive rally we're all hoping for in the next little while. Even if Bitcoin hits 32, 34K, alts could still be struggling. Okay, so moving on. Some big news of the week, last week. Shortly after the FOMC stuff, the SEC got back on their asses again, starting to lay charges and warnings and stuff. So we've had Justin Sun, who, if you don't know, he's one of the founders of the Huobi exchange. He's also responsible for the Tron network and what was the BitTorrent token, I think, as well. Well, I guess, yeah, it says right there. So he's now being charged for doing mass market manipulation. And this is on several fronts. Basically, a wash trading, so basically faking volume and also basically, I'm sure you heard in the news in the last week or two, a lot of big celebrities have also been hit. It's all tied into this, where he was using them to push Tron and BitTorrent and a few other projects. And these celebrities were basically shilling this stuff, and they were paid an undisclosed amount of money for doing it. I think this article mentions it as well.
I mean, the main one is
there it is.
Jake Paul, isn't it? But they didn't declare that it was an advert. It's what the SEC got those lot for.
Yeah, so Lindsay Lohan, Jake Paul, Soldier Boy, Lil Yachty, Neo, like the list just goes on. Just basically saying, and the SEC takes that kind of stuff seriously. I'm sure any of you who have done any kind of social media influencing over the last few years know the SEC has made it very vital that you don't have to necessarily disclose how much, but you do have to disclose if you're being paid or even if you've been compensated in any way. So like there used to be a time I used to do, gaming videos and stuff like that. But I actually had to say if I was given the game for free by the developers, even if it wouldn't reflect what my opinions were, I did still have to declare it. And I'm not even in the US. It's just to comply with streaming laws or streaming policies, I should say. So, but the big thing about this is that because the thing to be concerned about here is the fact that the Tron network itself specifically, represents something like 57 to 60% of the USDT supply. So there is the possibility this is all part of an ongoing process to target USDT. This might just be step one. Now, to be fair, I don't know. I've been trying to look this up and I haven't been able to find a good answer to it yet. If the Tron network was, say, to be suspended, let's say somehow magically the SEC manages to get it completely shut down, I would assume Tether could simply just move the token. Well, not move the tokens, but basically snapshot the blockchain of Tron and create various addresses accessible to people on different chains. But I don't know exactly how they would be able to do that in such a way to ensure everyone, is validated for the money that they're owed. So there is the possibility that USDT is still a target. And the only real reason why it's still USDT still bothers me, but the fact that the SEC might be going after them, is I hear no news about it. The one thing I've noticed, and I'm sure many of you have as well, is that when the government really wants to target something, it's just like an all-out attack. It's an all-out assault that just happens instantly. Like, take a look at what they did with Tornado Cash a few months ago. They just decided, well, it's it funds terrorists, so we're shutting it down. They shut down the service. They're arresting developers. They're freezing USDC assets all over the place. And that happened in the course of like 12 hours. People went to bed and woke up in the morning, and the entire cryptocurrency landscape had changed. That's what they do. Even if they took months to kind of prepare for it, no one suspected that they were going to be targeting Tornado Cash. But when they make a lot of noise in the media about something, very little tends to happen. So, like, a great example is Binance. Look at how much FUD Binance has had. Look at how many concerns the SEC and the governments have had over Binance and potentially working with sanctioned populations and stuff like that to allow them to continue to facilitate transactions. Yeah, everything there is still working perfectly fine. But then suddenly Kraken gets nailed with a lawsuit over their security issues. Coinbase is being hit. They got hit with a Wells notice last week, which is the next topic for me to talk about. They got hit. So there's a lot of noise that will likely lead to a whole lot of nothing. But then if they actually have something that they're really pushing for, like something to be game changing, we hear nothing about it until it actually happens. That's what's concerning me, because I've heard so little about USDT in general in the last, like, since the whole collapse of FTX. I've heard nothing about USDT. I don't know about the rest of you. Like the whole speculation that that they don't actually have their one-to-one reserves and all that sort of BS. I mean, maybe there's a little bit of talk about it when we had the bank failures a couple weeks ago, but to be honest, that was just more whether or not USDT had exposure to that stuff. But in any case, moving on. Yeah, so Coinbase got hit with a Wells notice, which I tried to find information about it, but apparently Wells notices are not public record unless the SEC pursues action. So we may find out exactly what they're targeting. Like Coinbase kind of gives us some hints, but the SEC has said very little about it. And until they actually file suit against Coinbase, we won't know what the actual accusations were as far as specifics goes. But Coinbase basically says they got the Wells notice saying that they were having issues. This is from Coinbase itself, so take it with a grain of salt. But they're basically saying we got told we're fucking stuff up. This is the key point right here. The SEC told us they've identified potential violations of security laws, but little more. We asked the SEC to specifically tell us which assets are causing issues. They won't tell us. So basically, it's the SEC is saying you're doing something bad. It's the equivalent of a parent saying, you did something wrong, and you better tell me what it is, because if I have to tell you, you're going to be in a lot more trouble. Is effectively what it sounds like here. It could just be a fishing expedition. They could actually have specific concerns with Coinbase. This could be a shot across the bow. Like, this could just be a warning shot at Coinbase for something else that's going on. Like, there's no way to know. But it's stupidly vague. And we'll know more if a lawsuit actually does file, because then all that information becomes public record. But until then, we can only guess. But this does show the SEC is starting to make waves again. When they conveniently started doing it just after the FOMC meetings. So that's just something to watch out for. This likely will not be the last thing that gets targeted over the next little while. And speaking of FOMC, I wanted to kind of discuss that a little bit as well. Don't need to share for the moment while we discuss this. I want to get your guys' feedback on this because I watched it. I'm sure many of you guys watched it as well. But when I watched it, the way I heard things from Powell is that he specifically said that their policy on interest rate hikes were changing slightly in the sense that they thought that ongoing interest rate changes is likely not something that's going to keep happening, but they are going to be constantly reviewing things, and that interest rates hikes will likely still continue to occur just at irregular intervals, depending on what other regulations come into effect and how the data looks from month to month. That was kind of the hints that I got. However, even in that meeting, there was talks that, oh no, the FOMC has somehow magically already stated they're only going to do one more rate hike, and then after that, they're done. And I'd love to hear your guys' opinion on that, on whether or not you've just heard that. Maybe you saw something in the speech that would indicate that maybe I missed. I don't know if you guys have any feedback on that.
I mean, I missed speech because I was out, so I didn't see any of the wording. But I think that's just people have assumed, dating back to FOMCs ago, so actually probably sort of December, November time, when they were talking about a terminal rate suspected at being around about 5.25, and that people have just made the assumption, well, it's going to be 25 basis points. It was only 50 basis points away at the time, so it's only two more. One of them's just happened. But I've always thought in every speech he's given, he's never said, one, what the terminal rate is, or two, that that they will only be done in two short periods. So, yeah. And I know we're not really talking about it, but given the amount of billions that they printed last week, pretty much eradicated about 6 months worth of quantitative tightening, I'm not sure inflation is going to be under control anytime soon.
Yeah, I agree with that completely. Now, the one thing I will say that I can say without a shadow of a doubt is that Powell also did pretty much make it abundantly clear that even if they stop raising interest rates, a pivot is not expected for this year. So all the people talking about interest rates getting cut, he basically said in no uncertain terms that's not going to happen. Like, I mean, there's always
also through 2%. He kept saying 2%, 2%. He couldn't say it enough times. And then everyone on Twitter and the whole market seems to have just decided that, yeah, like Harry said, that, and like you're saying, that right, we've got 50 points left, we've done 25, and they just concluded it. Whereas he kept saying that we're not going to, he made it really clear, but he kept saying 2%. He was deliberately ambiguous because I think he didn't want to spook the markets too much, but he didn't want to get people spending too much. So he was just trying to sit on the fence, but he kept throwing 2%. He wouldn't drop that number. I mean, I think in one sentence, he said it about 3 times. And I think he's really trying to push this point. So the idea of a pivot seems crazy to me.
Yeah, and that's the thing. So basically, I'm sure every single time we have an FOMC meeting, there's going to be talks of potential pivots, especially after they do their next rate hike. If it's another, 25 basis points, and it hits that number that the central banks are expecting to be the cap that everything's going to be, that there's going to be talks of nonstop pivots, especially if you start seeing interest rates go down. But until interest rates are close to that 2% level, as Mike there says, there's just no reason for them to do it. And like Powell did specifically say, just don't expect it. But I mean, data could shift, but like Harry there said, there is a good chance that our inflation numbers for April and more likely May will likely be what we see as a result of what occurred in March with the bank liquidity swap programs being issued. So a lot more money has now entered the market as far as accessible cash goes. So yeah, inflation is going to go up because the banks now have a blank check again. They were all getting scared that shit was going to go down. So they actually started circling the wagons, and the government said, no, don't worry about it. We got you covered, boo. And they're just going to go back to business as usual, at least for a little while anyways. So we could see inflation start going up again. And Yeah, and we'll likely see a little bit of that in April, but we most likely see the best numbers in May. That will really be telling as to what to expect there. All right, so other things in the news. Canada is fucking me over again with cryptocurrency regulations. And it no doubt is going to start playing around the rest of the world. Like basically the US is a great example of if a government is going to screw you over with crypto regulations, the US is the place to watch as to what your country could do. Canada is the runner up to that. So anything Canada adopts that's equivalent to what the US does is a good sign you're probably going to see other countries starting to adopt it as well that are going to have any level of anti crypto stance. So things that are happening in Canada right now. Most of this isn't new news. It's just the majority of it is it's all coming into effect now. So they are basically banning the usage of any exchange that's not registered in their jurisdiction, which is similar to what the US does. I mean, a lot of countries recommend against it, most don't flat out ban them. Or like actively sue and attack those other exchanges. See you later, Vinny. Then they've also stable coins are being targeted. So no regulated exchange in Canada can actually sell stable coins now, period. It started with algorithmic stable coins. Now it seems to be stable coins in general, unless they've been approved by the Canadian financial authorities, which at this time, no stablecoin has been approved. Likely the one or ones that will be approved will likely be CBDCs as they get released. So and then of course leverage and margin trading has been banned because we can't be trusted with our own money unless it's in the stock market or Forex, in which case then we are welcome to just blow our money. All we have to do is just sign a piece of paper saying, yeah, we're aware of the risk, and then it's apparently acceptable. But in crypto, we don't have that luxury. So it's becoming tougher in Canada. The US, of course, is tightening their regulations. So keep an eye out because over the next few months, we'll likely start seeing more regulations happen all over the world. Whether or not this is good for crypto long term or not is yet to be seen. I still think the world stage, as far as cryptocurrency goes, is still very much in flux. And I think no matter how it plays out, there will always be a place for us to do things. It's just going to be what we do now may very much differ in 2 or 3 years. Like, which exchanges we use, what stable coins we use, the currency we base all this stuff off on, there's a good chance we may not be using the US dollar as the standard for pricing in the next couple of years if they keep going the route they're going. But we'll see. Hong Kong and China are losing their regulations. Yeah, the irony with that they're getting more adoptive of that sort of stuff. All right, so other things to discuss. I have a list here of dates to remember. These are things that are all coming up over the next few months. First key one is a Shanghai update for Ethereum. That is April 12th at 10:27 p.m. UTC. So they have it narrowed down to the minute that this is going to be happening. So I would keep an eye out on that because the Shanghai update, the most important thing about that to keep in mind is that is when unstaking should be accessible for Ethereum holders. Now, that doesn't mean there's going to be a run on selling as much Ethereum as possible can, but you do have to keep in mind some of these people have been holding on to their Ethereum stakes for years, like when Ethereum was like a few $100s kind of time. So there very much could at least be some profit taking, and there could be some people just looking to completely exit. Personally, every time we have seen something like this happen, it usually turns out into a whole lot of nothing. It's just more market hyperbole than anything else. But it's just a date to keep in mind. I would recommend during that time, at least for me personally, I'm going to be looking at the price action at that time, and I will likely be out of most of my ETH positions at that point in time. I will likely keep some because there's always the possibility that after this update releases, ETH spikes. Shit happens. But my guess is actually nothing occurs as far as price goes, but I'll likely reduce my risk on it, wait for it to play out, and then I'll plan accordingly after that. But I'll likely keep some money in it just to as a in case. Is there a date on when ETH will be called as security? April 12th at 10:27 p.m. UTC. The speculation is that the SEC is legit waiting for unstaking to be possible before they go after Ethereum. And I've actually heard for the last 6 months that the SEC had a big bullseye target on Ethereum because to take down Ethereum, or to at least, I don't know if they would be trying to get rid of Ethereum, but if they could get Ethereum to get in line with the SEC to properly register themselves, comply with all the SEC regulations, it would be a very huge milestone in getting other cryptocurrencies to follow suit. So that's a possibility. I don't know. It could be argued there's no point in buying an alt until the SEC takes down. I don't know if they're going to take down ETH. I honestly don't. I feel that there's too much money, especially when you talk things like USDC involved. I don't think the SEC would have enough political leverage to take down Ethereum. But I could definitely see them trying to use ETH as the poster child for how alts should function to work with the SEC. That, I think, is where things are going to play out. But how it plays out, I have no idea. It's just something to watch at this point in time. And alts in general, I mean, as I mentioned before, are still bleeding market cap and pricing. So in general, I am avoiding alts for long-term holdings, with the exception of a few. And those are ones that, I'm just kind of buying coin in and I'm just keeping it aside. And I'm not going to be looking at it likely for years. All right, so other updates. FedNow is launching. They haven't given a specific date, but it's sometime between May and July. And so basically sometime within the next 2 to 5 months, FedNow is happening. If you're not familiar with what FedNow is, it is basically their first instant payment transfer system that's going to be usable, worldwide. So basically think of it like their network for whatever CBDCs they decide to come out with in the near future. I'm not sure what the UK equivalents are, but we've had something like that for a long time called Interact, which basically allows us instant payments between financial systems, for a long time. It's not quite the same thing, but it's similar as far as the process goes. But likely FedNow is phase 1 of launching CBDCs. So once that comes into effect, we will likely start seeing some shifts as far as how crypto regulation goes, and we'll likely see implementation of CBDCs over the next couple of months or so after that. Another big one is the US debt ceiling. Now, we don't know exactly when the shit's going to hit the fan, because we're already in crisis mode for it. So I'm going to go back to screen sharing here for you guys, because we've probably all seen the site before. There's my screen. All right. Okay, so we've probably all seen. I meant to have this prepared. Here we go, the debt clock. So the debt clock basically is an ongoing tally of the money that the US government owes in various different ways, shapes, or forms. The only one we need to care about here, right here, is this top one in the upper left, the US national debt, which you can see is running at $31.6 trillion. Now, here's the kicker. The US debt ceiling is 31.4 trillion, which means they're already $200 billion over the debt ceiling. Now, that number was hit in January, but there was special approval done by the Treasury Department to allow the government to continue. They didn't have a shutdown. They're allowed to continue business as usual, using what was known as, see if I can remember the specific term, but they had to use extraneous money management, something along those lines. In short, basically, the US is using funds that they already had stashed away, and they are basically trying to use their revenue systems to allow them to continue funding stuff. That's only going to go on for so long. So this number going up to 31.6, that is likely just interest. That is just more money the government's owing based on a 31.4 trillion that they had at that time in January. They're not borrowing more cash. They're not allowed to. But they can still function as long as they still have funds to cover paying for everything out of pocket, basically. But they're going to run out of funds eventually. And the expectation for that to happen is sometime between June and July. June to September. When exactly that'll hit, no one knows, because we don't know how much money the US government has sitting in their pockets. And there's not enough information I can find about what their extreme money management systems are. So I could not find specifics, and likely we won't get specifics. It'll just one day they'll just be out of money. Now I believe June is the expected time frame that they're supposed to be coming up with a potential solution to the US debt ceiling. But just one thing to keep in mind, this summer is going to be volatile because you've got the Fed now releasing, you've got the US debt ceiling. At any moment in time, like, it's going to bring the government to a halt, because at some point they're just going to run out of funds. And you've got CBDCs being released in the next few months as well. Not necessarily full scale, but I'm sure they're going to start implementing it soon enough. And it's all happening at the same time, which usually gets pretty scary. So it's just something to keep in mind, that summer is probably not going to be a quiet time for us. And not just in the crypto space, but in TradFi as well.